Welcome to Vantage, your guide to the dynamic universe of cryptocurrency. Whether you're a novice investor or a seasoned player, join us as we delve into the ins and outs of the crypto market, offering insights, strategies, and the latest trends. Let's get right into it. So, you've set your sights onto investing, with a bit stashed away from your savings. Maybe Bitcoin's crossed your radar a few times, and it's piqued your interest. Heard any tales about someone hitting $1 million with Dogecoin, or those who struck gold from Bitcoin a decade ago? $1,000 in Bitcoin a decade back would sit at around 300 grand now. Not too shabby, right? But diving into crypto for a newbie can make even basic tasks like snagging that first Bitcoin feel daunting. And that voice in your head, it's asking, what if I lose it all? Now, let's unravel the newbie crypto investment steps, clear, concise, and newbie friendly. First up, why invest at all? Well folks, flock to crypto for its wild ride. Volatile yet promising, aiming for those fat stacks in a short stint. The second reason, people are waking up. Retirement feels like a dwindling dream and money losing value. If you're stuck with cash and you're burning dough, savings? Laughable. They can't keep up with inflation or money debates. Investing becomes a necessity, almost non-negotiable. Sure, there's a buffet of things to invest in: art, watches, real estate, stocks, bonds, and the daring plunge into Bitcoin and other cryptos. But bottom line, you aim to beat inflation and rake in those sweet profits, right? An investment essentially tossing cash into something set yield returns, be it from selling or dividend. Now, the classic question pops up: how much to start? Well, in crypto, any sum flies. No need for a mill, $100 works just fine. But here's the drill: take it slow. Educate yourself before rolling in big bucks. Tempted to go all in? Hold that impulse. How much to plunge into crypto? It's your call. Personal finance, portfolio size, and how much risk you're game for. One golden rule: never bet more than you're okay losing. Always keep that in mind when in the crypto game. Let's delve into the frequency and timing of purchasing. For many, a passive approach to crypto investments proves most effective. For instance, setting up an automated weekly buy of $100 in Bitcoin helps average out costs and keep an eye out for the long game. Now, you've got a substantial sum to invest swiftly. Timing becomes critical. Strangely enough, the best moment is when the market's in a lull, gripped by fear and cries of crypto doom. Looking for oversold indicators like relative strength index can pinpoint solid entry points. Conversely, steer clear of splurging when prices hit all-time highs, boosted by massive jumps. That's risky business. When everyone's riding high on greed, flaunting Rolexes and luxury cars, it's a danger zone. Media hailing crypto as the new financial savior, the worst time to buy. High risk, low rewards, that's the reality most ignore when diving into crypto. As for how much your portfolio should wade into the crypto waters, it's a personal choice. There's no set 3% or 10% rule. Studies suggest that just 1% invested in Bitcoin can outshine traditional stock bond portfolios. You should aim for a mix like 59% stocks, 40% bonds, and 1% Bitcoin. But some risk takers opt for an all-in Bitcoin stance. Personally, I spread my wins from crypto to stocks and commodities for diversity. But hey, don't forget, crypto's not just risky, it's volatile. Invest too much and you're riding the risk wave. Zero exposure, you might just lag behind those who hold it. Understanding what crypto really is matters here. It's digital money, intangible, and unlike physical assets like art or houses, no ownership rights or protocols. Unlike stocks, these crypto assets play by different tax rules. Do something the taxman won't let slide. Each type of crypto serves a different purpose. Bitcoin's a digital currency transacted over the most secure network globally, while Ethereum operates as a commercial supercomputer system, hosting tokens and currencies and allowing thousands to be built on it. Tokens, on the other hand, are like startup companies on blockchains, varying in decentralization and use cases. There's a fascinating array of tokens out there. Meme coins, basically images with attached tokens like Doge, Frog, or memes, might seem silly, but they can pump up like mad, despite being pretty much useless otherwise. There are tokens like GMX offering actual returns from platform fees to holders, adding a real earning factor to the mix. These tokens operate in various ways. Some, like MakerDAO's MKR token, have built-in burning mechanisms. Others, such as Chainlink's Link token, are vital for platform or network services. Each which depends on hype, users, successful teams, and integrations for success, fundamentally driving the crypto world. Now let's delve into specific cryptocurrency picks. Bitcoin, the OG crypto, acts much like digital gold, perfect for those seeking simpler exposure. It's safer compared to others, but don't expect those wild gains from its early days. Next up, Ethereum, the second largest cryptocurrency. It's hailed by some as the potential top player. Owning Ethereum gives access to everything built on its platform: decentralized gaming, NFTs, DeFi, you name it. Plus, it burns, allows staking, and a 50-50 split between Bitcoin and Ethereum offers broad exposure to the market. They're also getting more accessible to traditional investors through various investment instruments like ETFs. But if you're eyeing bigger gains, the real money seems to be in alternative coins. They are riskier but have higher reward potential. Split into large, medium, and small caps, each category comes with a unique risk-reward ratio. Larger caps, usually the top 20 coins, are considered safer but might yield lower returns. Mid-caps are in the top 20 to 200 range and offer moderate risks and rewards. Small caps, with market caps usually under $100 million, are high risk but could offer significant gains. Choosing altcoins requires more than just picking names. Look for solid partnerships, good VC involvement, understandable business models, strong teams, and sensible token models. Avoid tokens with no clear function or those flooding the market. The crypto market can be irrational sometimes. Coins without real use gain popularity while solid projects go unnoticed. Acknowledging this uncertainty is the key. If you're keen on crypto investments but not ETFs, signing up on exchanges like Kraken or Binance is standard practice. These platforms offer a wide range of investment options. Referral links for these exchanges are in the description if you're interested. The Know Your Customer process is the first step in buying cryptocurrencies on an exchange. Once your identity is verified, funding your account via wire transfer or credit card is similar to buying stock, but the crucial difference: withdrawal options to your personal wallet, essential due to exchange vulnerabilities. Security-wise, choosing a software or hardware wallet aligns with decentralized ethos of cryptocurrency. Now, let's talk about making money with crypto. Trading involves buying low and selling high, requiring market know-how and timing. Staking, like coins in Ethereum for rewards, requires cautious purchasing to offset potential losses. Engaging in DeFi operations on blockchain networks, profitable as they may be, comes with hack risks. The secret sauce: taking profits. Selling at the high time is vital, regardless of your market entry point or engagement in DeFi or staking. Many lose their gains due to an inability to secure profits. Strategic market understanding and knowing when to cash in are key to successful crypto trading. As we conclude, navigating the diverse world of cryptocurrency requires insights and strategy, especially knowing when to secure profits. For more in-depth analyses, investment guidance, and updates on the crypto realm, subscribe to Vantage. Stay informed and we'll explore the ever-evolving landscape of digital assets with us. We'll see you on the next one.